Is Dave Von Reed, CEO and founder of Vesterr, and today we're going to be talking about access to capital, right? Traditional financing, crowdfunding, of course, raising with capital, raising with Vesterr. So today we'll cover the capital gap, traditional financing, real estate crowdfunding, Vesterr, and focus, and just getting started. All right. So capital a lot of times is the bottleneck when you're getting started in real estate, because you need money to buy real estate. I don't care what anyone says, you cannot buy real estate with zero money down. There's going to be some money involved. I don't know where, but it's some money involved. So somebody say you could buy with no money down. No, somebody's putting money down. It may not be you, but somebody's going to put money down. But that's the number one constraint that most sponsors have that slows their growth. To date, I've helped close or transacted $50 million in assets, as well as help create over 100 Black hotel owners and investors through alternative capital since 2019. All right, so just the traditional toolkit. So typically, traditional financing is when you go through bank or SBA loans, which SBA stands for Small Business Association, which is a government-backed loan. That's probably the lowest cost of capital when you go through SBA. You can put down as little as 10%. So you have like a capital stack, right? So think of it as a triangle, right, or a rectangle. Rectangle better. So you have the debt at the top, and then you have equity at the bottom. That's an equity stack. That's a capital stack. So you hear that a lot in commercial real estate. And so with the capital stack is you have your sources and uses, right? So the debt is the mortgage or any debt, anything that'll be used for the debt. So the mortgage, and then the equity, will be like the down payment, any incentives. So those are the two things that makes up the capital stack, right? So what we're talking about right now is the debt side. So you have the first thing we talked about was banks and SBA loans or the traditional loans. Then you have hard money lenders. Those are typically a little bit more expensive. They're higher rates, shorter terms for speed. This is for folks who, may not have the best credit, may not have the best experience, and they get denied from a traditional bank. So they go through hard money lenders. So whereas if you have horrible credit or you don't have a strong balance sheet and the bank says no at a 6% interest rate, then a hard money lender come through like, hey, I'll give you that same loan, but it's at 10%. And then I'm only going to give you this money for 2 years, interest only. Then you got to refi out in 2 years. All right. So wherever the terms are. And then you have private relationship lenders. So those are people in your network. Sometimes people can be your bank. So meaning if you need, I don't know, 100,000, the bank says no, you can't get money from a hard money lender, but somebody is willing to lend you the money that for whatever you negotiated, 8 to 10%, right? And the terms may not be as strong or strict as a hard money lender, or it could be stricter. So those are the different financing options. So here's where the traditional financing falls short, which I talked about before, right? So the strengths lower cost of capital, right? So if well-qualified borrowers, meaning strong credit score, strong balance sheet. And what that means is you have a lot of equity, you have a lot of assets, it's not a lot of debt. You're familiar with the underwriting process and closing process. So that helps when you're working with traditional banking. Full ownership retained by the sponsor. So limitations that happens when you're doing the traditional financing. So it's capped by one lender's balance sheet. So they'll let you know how much they'll be willing to lend to you. Again, personal guarantees and credit exposure. So meaning you'll have to personally guarantee. So if you're buying a building and if it doesn't work, instead of the asset backing it, you'll be backing it. So if it doesn't work, it's going on your credit and you are liable, and the banks, they coming after you to get their money. Right. So slow underwriting process. Some banks can take a long time. And the relationship-based capital doesn't scale with deal volume. So those are some of the limitations with financing or traditional financing. So here's some alternative paths to capital, right? So you could do syndications or joint ventures. So essentially what syndication is we all come together on this call or this webinar and we invest, and I'm the deal sponsor, right? So you're coming in and everyone is investing, right? Or joint venture, I'm gonna pick on Adrian because I know she's here. Joint venture is Adrian say, hey, Devon, I want to come in. This deal is $1 million. I got $500,000. I'm like, all right, I got $500,000. We come together and then we joint venture on a project, right? So that's what that means. So we co-own, we co-fund a deal. Seller financing is, I'm gonna pick on Miss Darlene now because I know she's on the call. So seller financing is the seller will act as the lender. So let's say Miss Darlene, she has a building that has no mortgage on it. It's paid and clear. But she doesn't want to do anything with the building. It's just sitting there. She's paying taxes. She's paying insurances. It's not making any money, but she doesn't want to do anything with this building. And so then I come to her and I'm like, hey, I have this idea for this building, but I can't get traditional financing. The bank is saying no. Hard money lender is too expensive. I want to buy it from you, but I'm not in a position to go to a bank. So then Miss Darlene can say, you know what? Well, I can do seller financing for the first 2 years, interest only, whatever amount she paid, whatever amount she says. So we work with lawyers and everything and negotiate it. And so basically, I pay her a monthly amount every month, right? So think of it as like a triple net lease, right? I'm essentially leasing it out from her. So I'm paying the utilities. I'm, giving her money every month. She's taking that money and doing whatever, paying the, insurance and the taxes or whatever. But I'm paying her every month. And then let's say we do seller financing for 2 years. So 2 years, I could be like, okay, Miss Darlene, I want to buy it. And by that point, I've shown 2 years of me paying, some of the balance down, right? Wherever how it's structured. So then we use those documents and we go to the bank. And then we try to get financing based off that. So that's how it works for seller financing. Those are harder to get. So a lot of times people go crazy because a lot of times when people do seller financing, it's kind of like you kind of know the person. It's more relationship based because a lot of times people, when they sell the asset, they just want to be done with it. They don't want to. They don't want to hold on to it. They're like, I don't want to deal with you. I want to deal with this building. I want it gone. So that's why seller financing can be a little tricky. Then we have real estate crowdfunding. So think of syndications, but think of it as just online. All right. So real estate crowdfunding is still regulated by the SEC, but it's when let's say we're all coming together on the call. Adrian, let's say she has a deal on Vesterr, and everybody on the call wants to invest, right? So we're coming in, but the minimum, typically, if it wasn't on Vesterr or our counterparts or competitors, let's say it's 50,000 minimum to invest, and you're like, oh my gosh, I don't have 50, but I have 10,000, and then somebody else has 10,000, somebody else has 10. So Adrian makes the minimum 10,000 for you all to invest in her property, and it's done online, right? So that's real estate crowdfunding. So what is real estate crowdfunding? I'll go into more detail. So how it works, especially on Vesterr, a sponsor would list the deal, right? So we call them deal sponsors. So the deal sponsors would list the deal after we do our due diligence, after they pay the onboarding fee and get approved by the SEC. Once they list the deals, then it goes live, right? So it goes live on our website. And so if you decide to invest, the funds are held in the escrow. And then we use a regulated escrow agent to hold the funds. So once the deal is closed, then we transfer the funds from escrow, or the escrow agent transfers it from the deal sponsor. The deal closes and then it funds. So that's essentially what real estate crowdfunding is. What makes us a little different when we're or Reg CF or regulation crowdfunding, again, we're regulated by the SEC. So it's a lot of stipulations, a lot of compliance. So it's not like we're just a website. That's what some people think. It's not. It's more to it behind the scenes. So why sponsors would essentially choose crowdfunding to raise capital, right? And you can use crowdfunding for both debt and equity. Hopefully you all remember debt is mortgage. It's just a fancy word for mortgage or another word for mortgage. And then equity, think of it as a down payment. That's probably the best way to explain debt and equity. But advantages, you get access to hundreds of investors instead of dealing with one lender. You can raise larger amounts without a single point of failure. You can build a public track record, right? So people see that you raise capital online, and that you were able to, return profits to investors, online. That helps. And then investors, they can use their retirement accounts. Another advantage is it's regulated, right? So that's probably the biggest thing that makes a lot of people feel comfortable is that it's regulated, and then escrow agent is used to raise capital. All right. And then again, some considerations, it is some legal fees. The marketing does take time because you're basically asking a lot of strangers to invest in your project. And then funds, they sit in escrow until it's fully raised. And then of course, you have to go through the due diligence with offering documents and subscription agreements. So a little bit about Vesterr. We raised a little bit over $4 million since we launched in 2022. We have created 100 investors. We're the first Black-owned, woman-owned crowdfunding portal for commercial real estate, including hotels. We are a member of FINRA. FINRA stands for Financial Industry Regulatory Authority. So we had to go through a lot of scrutiny, and I had to go through a lot of background checks to get approved. And again, we're SEC regulated, which stands for the Securities Exchange Commission. So their job is to protect investors, right? And so that way we can publicly raise funds for folks. And so with Vesterr, you can raise up to $5 million per deal. So it takes about 4 to 6 weeks to raise capital. It's about a $2,500 onboarding fee. And anyone who owns over 20% of the deal, this is public, we have to share this public. So we do an engagement agreement. Once it's approved, the sponsor will sign it. Then we do a compliance. So they'll work with counsel, we'll review it. Also the escrow due diligence. We work with North Capital, that's our escrow agent. And then once they approve it and review it and everything, then it's open. And then we'll file it with the SEC, the Form C, which is basically a risk disclosure. Then once we do all of that, which can take about 4 to 6 weeks, the deal launches to our investor network. And like I said, you can raise up to $5 million. And how we generate revenue is we take up to 5%. And that goes 5% of the total raise. So that's how sponsor will raise on Vesterr. So as you can see, it's not just a website. It's a lot of compliance. It's a lot of layers that we have to go through on the back end. Now, this is how investors can use can pay with ACH, wire, credit card. Credit card is capped at $5,000. You can invest using your retirement accounts, including IRA or self-directed IRAs. As I mentioned before, we use North Capital as our independent third-party escrow agent. So the funds are there. It doesn't touch my hand, doesn't touch the deal sponsor hands. There has been deals where they weren't fully committed or the deal just didn't go through. And so all of the funds were returned back to the investors. So funds are held in escrow, like I mentioned, until the deal is fully subscribed, right? And every sponsor deal is vetted before it goes live on the platform. So we definitely denied a lot of deals. We just don't accept every deal. So let's talk about this. Which path, if you do have a deal, which path fits your deal, right? Are you thinking speed? Because if you need it closed in like 2 weeks, then hard money lender is more expensive, but sometimes it's not as expensive. If you're credit and you have a really good balance sheet, they're willing to work with you. If you're looking at scale, crowdfunding definitely unlocks capital beyond one lender or one investor. Cost, if you're doing traditional bank financing, that tends to be the lowest option for qualified borrowers as far as the interest rates. And then track record, right? A platform like Vesterr definitely helps sponsors build a public, repeatable investor base. So most experienced sponsors use a blend traditional debt for speed and cost, crowdfunding for scale and investor relationships. So essentially what we do, we connect the deal sponsors to investors. That's essentially what Vesterr is, right? And we just do it online. That's pretty much what Vesterr is, as I just mentioned. And about me, I haven't talked too much about myself, but founder and CEO of Vesterr, started off as a front desk agent, navigated my way to hotel ownership, became an entrepreneur in 2017, launched Vesterr in 2022, created close to 100 hotel owners and investors since 2019. Some of you all on the call, I appreciate that, as well as I have a book called How to Buy a Hotel, and as well as a new AI program for those who are looking to get into real estate or hotel ownership and they don't know how to navigate it. Um, so if you're ready to invest, feel free to contact us at invest@investor.com. We'll be happy to review your deal to see if it makes sense, see if it's a good fit. Like I mentioned, go to invest@vestor.com. If you haven't already, make sure you follow us on LinkedIn. Make sure you also follow us on Vesterr. So do we have any questions? Uh-uh. I know I went fast. Have any questions? What? No questions? Are there regional limitations? Can we do international projects? Um, It depends. We've done an international project, but the deal sponsor was American. So that's what. So hopefully that answers the question. Yeah, we can send out the slide deck, and then we'll definitely send out a replay. What is it required to submit a project for consideration? Let me send you the website. The basic thing is that's required is that we'll need a pitch deck and the deal has to be under contract. That's like the most important thing. So if you're just like thinking about it, but it has to be under contract. If it's not under contract, like, you know, it's how would we capitals, how would we use capital, or how could we build a capital stack using an SBA loan, seller finance, and investor? That's a good question. With SBA, they're going to check every single investor who invests. So anyone who invests as a limited partner, they're going to check because it's a government loan, so to make sure everybody is not. We check, but they also want to check too. And the biggest thing is they want to check them and also make sure that they're not, terrorists. Same thing with us, that we have to check for. And then anyone who owns over 20% have to personally guarantee the loan. Seller financing, I'm not sure if that'll work with the SBA. And I don't, depending on how much seller finance is being given, you may not need it with SBA and Vesterr, so you may not need it. But Vesterr will come in for the equity portion, and then SBA will come in for the debt portion. Okay, and I put the link in the chat for the portal. Is there a minimum credit score to raise funds on the platform? No, it's not a minimum credit score to raise. We don't even check your credit. We do a background check. But I will say you do need to show that you'll be able to get financing. So even though we don't check, whoever you're trying to get financing, they're going to check, and you need to have somewhat of approval. So you can't raise with us and then the bank is going to tell you no, because that means the project isn't going to close. And so now we have to refund all these investors, and then it's just going to cost us. So no. Do you have a pitch deck template, or do we create? Yeah, you create your own. Was a conference that you recently attended related to access to capital? Yeah, I went to LendingCon in Orlando, so now stay tuned. Make sure you follow me, because it's going to be met with a lot of people, met with some lenders, did a lot of interviews. So stay tuned for that. You mean the land has to be under contract? Is that what you mean? I have a pitch deck for bank and one for investors. How much due diligence has to be done to secure an approval? That is a great question. So yes, whatever you're raising capital for, so if the land is under contract, that's great. Then you can start raising. You do have a pitch deck for the bank and one for the investors. Good. Go ahead and send us. You're definitely in the right direction. Yeah. Can Vesterr finance? So we can raise up to $5 million. So if you have a deal that's $2 million and you want the majority of it coming from the investors, then the answer is yes. However, I will note that do not look to Vesterr to solely raise capital. Right. So what I mean is we're an extension of your marketing team. So you got to be out there getting investors. You got to be out there doing marketing. You got to be out there hustling. We're just use us as an opportunity to market, because publicly you can't really do it with the SEC unless you're licensed and all these criteria. So with Vesterr, that's how you can raise publicly. So I'm at the finish line of purchasing a boutique hotel, and I may need an additional 35,000. Would it be possible to use 35,000? May be a little too low for us. I would come in at I would come in like if you need to raise like 100 to 250,000. I don't know if I would. I don't know if I would use this for 35,000. I don't. That would make maybe 50. Maybe I don't know about 35. Because by the time you spend money and lawyer fees and everything, that's gonna cost, probably about half of that 35,000. So the answer is, if you need to raise like a little bit more, then I would come to Vesterr. What is the percentage paid out to the investors, and what is the timeline to pay? So that depends on the deal. So we try to look at deals that can generate, 1.5x, 2x equity multiple, but that depends on the deal. Every deal is different on Vesterr. Okay, make sure I answered all the questions. So we take up to 5% of the total raise. So off the platform, you can negotiate terms, but we typically ask that you give us the terms up front. And we have to disclose all of that information to the investors. So I don't know about negotiating, but you just let us know up front as far as the terms, and that's what you put out there. And you set the ROI, because every deal is different. We don't set the ROI because it's not our deal. We're just the platform. It's the timeline for, yeah. Well, it depends on what the project is for. If you're dealing with commercial real estate, the returns are longer. If anyone tells you about a commercial real estate deal, unless you're coming in on the debt side, it's going to be a long time, because they just take long. Because they're operating businesses. It's different than residential. So typically, what is the interest? It depends. And interest deals with debt, not ROI. So if it's a debt deal, it depends on whatever the issuer or the deal sponsor. And then if someone is doing an equity deal where they're raising capital for limited partners in exchange for equity or securities, it just ranges. So I don't know what you could expect because every deal is different. I don't want to say 10% and then the deal on there is 12%. So I don't. It just varies. There's no like cookie cutter. This is what you're going to get because every deal is going to be different. Because the deal sponsors, they're the ones who are setting the deal. You can raise both equity and debt on Vesterr. Great questions. So are the investors able to back out prior to maturity? Let's say 5 years, 15%. Do I have the latitude to negotiate that term to be non-refundable? So that's something that the deal sponsor would have to put in their subscription agreement. So that is a deal by deal basis. So that's something that you would have to work out and structure with your lawyer. And if you do have that in there, then that has to be in the subscription agreement because that has to be outlined before the end. And we have to put that in there publicly and put that in the subscription agreement. So I don't know if negotiate is the right term, maybe disclose. I don't know about negotiate because it's kind of hard to, because you're dealing with so many investors. I don't know if you want to negotiate. And you really can't because it's what you put on a crowd. What you do for one, you have to do for everyone. Yeah, we have lawyers that we refer out. Are there any asset type restrictions or capital raise on the only commercial real estate? And you have to be under contract already. Oh, you're from the UK. You mentioned that you do international, but a person driving a raise in businesses rate. Yeah, the LLC, everything, it was registered in the US. Yes. Hi, Clinton. Yeah, everyone was, yeah, it was based out of the US. Mhm. All of the investors have to be American. We're not set up to do international investors yet. Do we have any other questions? I'll put the link in here. Like I said before, make sure to stay connected with us on LinkedIn and Facebook. And make sure you get on our mailing list. So are the investors able to back out? I think I answered that already, but I answered, okay, new replies. This is per deal. Yeah, but that's something that we don't structure. That's something that you have to disclose. Are the attorney fees based on a percentage of the deal or flat fee? That depends on the attorney. The attorney that we recommend, they typically do flat fee, and you have to, I think you pay like half up front and then half at the end. So regardless if your deal closed or not, the lawyer's getting paid. So take that into consideration. Does Vesterr consider social enterprise investments? What might that scenario look like if the profit shares are relatively smaller? Our investors typically look for more profitable, not social. We did have a deal that was on our platform and it wasn't successful. So we're more for commercial real estate. Our investors are, they want to invest and generate a return. The new platform, I don't have a new platform. This is it. Vesterr. No, you don't. The investors, they don't have to be accredited. We take accredited, non-accredited investors. Oh, oh, that's it. Oh, that's a different link. That's for the AI program, the leak for analyzing deals. There you go. So we're going to talk about after you invest returns reporting and reality. So that's going to be on September 11th. So we hope to see you then. Also, and save the date for VestorCon, which will be October 15th in Baltimore. So if you missed out last year, you don't want to miss this year. So VestorCon is in person and it's where basically you get to see, we'll have some deals by then. We'll be able to invest in deals live on the spot. So we look forward to seeing you on September 11th virtually and in person if you're in the DMV and Maryland area or Baltimore area. Because I was told that Baltimore is not a part of DMV. So I wanted to make sure I say the right thing. Okay. So I appreciate you all for tuning in and we'll see you all. We'll see you all next time. Okay, says this is useful information. I have had deals where I needed bridge loans. That's a good source. Oh, wonderful. Oh, thank you all, and we'll see you all next time. See you next month. Thank you.